Hello legends, it's Guan here. Thanks for tuning in for today's video. I'm sure many of you budding investing legends or newbie investors have heard of these two schools of thoughts, long-term investing versus day trading. So which one really makes more money? Let's find out in the following sections. I'll first explore the day trading and long-term investing before going into which method makes more money. So let's get right into it. Day trading overview. Day trading is basically you sitting down in front of lots of computer screens and reading charts and predicting the buy-sell prices so that you can execute and hopefully make profit out of trades. So simple, right? You just basically need to ask your crystal ball what are the correct prices for your trade and make lots of money. But do you have a crystal ball that can predict the future? Sadly, we all don't have it. If there were a crystal ball, no one want to go work anymore and just be busy buying lottery numbers and hoping for a big what. On top of that, nowadays, you also have the high frequency traders who use computer algorithms to make trades at a fraction of a second. It's definitely faster than your TikTok videos. You versus the computer algorithm in making decisions. You think it's easy to beat the algorithm? Traders also often need to use lots of computers and screens to help with the monitoring and execution. This can easily cost you more than $2,000, $3,000, $4,000 before you even put money for real trading. And don't forget that Wall Street traders often have access to insider info or better computers than you. Now, a day trader can typically choose to trade many different asset classes, from stocks to options to futures to forex and even crypto nowadays. Speaking of crypto, it's an extremely stress-free asset to trade, says every crypto trader ever. True story. Ultimately, think of day trading like playing CSGO. You always need to go out and hunt and shoot enemies with lots of actions, focus and strategies needed to win the trading game. Long-term investing overview. Long-term investing is basically you go Google looking for annual reports and study them like you're studying for final exam and squeeze your brain power big to think if it's a good business. Once you're happy with the business, you just deposit money and buy the shares and hodl forever and then get ready to retire in the Bahamas. Okay, jokes aside. Long-term investing sounds so simple, but is it really that easy? Hiya! If it's so easy, then there's no more Warren Buffett legend lor. Actually, there are many investors who lost money in the long-term investing. This is because some investors act in fear and decide to sell the shares when the share prices are at the bottom low after hearing negative news without thinking about it.
Just like a Chinese stocks crash recently.
There's a study that shows that if you're only invested for a month, there's a 40% chance of you losing money. However, if you stretch the investing period to 10 years, 20 years or so, the chances of you losing money is almost negligible, except if you buy in a whole Nokia shares lah. So you see, long-term investing really is just long-term monitoring of your shares. It's not blind buying and holding. The process is research and evaluate the businesses and monitor it throughout. Rinse and repeat it. Using the same CSGO analogy, you just go to the enemy's camp and camp there and shoot the enemies when they respawn over and over again. Yeah, rinse and repeat. The best strategy ever. However, if you are not ready to study and monitor the stocks closely, and you don't want to see yourself losing weight like Kim Jong-un because of the stress of keeping track of the stocks, just buy ETFs or robo-advisors. No more investing headache when you diversify your investing headache. Side-by-side comparison. In terms of amount of time required, again, day trading really needs a lot of time. It can go up to 2 to 3 hours or even 4 hours per day of constantly monitoring price charts. On top of that, you always need to juggle with your own emotions. Whereas, long-term investing is a lot more passive and you can choose to do the research whenever you like it. However, long-term investing often also needs you to put in hours and study the companies. Heck, even Warren Buffett reads annual reports for 8 hours per day. So it really depends on how much time you're putting in. For this round, long-term investing wins as the time required to research is flexible. Whereas day trading really requires a lot more discipline and focus on a day-to-day basis. In terms of capital needed, day traders can just start off with just $100 or so. And day traders can also use leverage. Essentially, this is to borrow money to make trades. Make money on a trade, multiply the win. Making losses on a trade, multiply the losses too. On top of that, there's a saying that goes, 90% of the day traders lose 90% of the capital within 90 days. It is a steep learning curve involving risk and emotion management. For long-term investing, meaningful return can only be achieved with a moderate amount of capital on a decade-long time frame. For example, assuming the past historical S&P 500 market annualized return around 8%, if you start with $1,000, it will take 9 years for that $1,000 to become $2,000. Whereas if you start with $10,000, it will double to $20,000 in 9 years. For this round, day trading takes the upper edge as you can possibly achieve trade win from a small pool of funding with a margin option available. But of course, be careful with the margin lah. Day traders can easily get burned by margin if not careful with the interest and fees involved. In terms of ease of operation, hands down to the long-term investing camp, as it's literally the simplest process where you just rinse and repeat the process and thoroughly review them over the period. Day trading often requires you to keep up to date with many news and your trading positions, which can drain a lot of your physical and mental energy if not managed carefully. For this round, long-term investing takes the upper edge as the process is simple and easy to follow. Most importantly, it's a repeatable process. In terms of which makes more money, you have Warren Buffett, the long-term value investor who have been getting 20% annualized return, whereas the Medallion Fund, owned by the quantitative hedge fund guy Jim Simons, reportedly gaining roughly 40% annualized return. It seems that Warren Buffett lost this round and the day trader community has won. But a deeper look shows that the Medallion Fund is not a two-man show like Munger and Buffett, but hundreds and hundreds of math and physics PhDs who have been building complex algorithms to make profitable trades for the Medallion Fund. In other words, the amount of effort needed to achieve this 40% annualized return from day trading is over 9,000 level. You need to be as smart as the PhDs at bare minimum. So all that being said, I'm definitely a lazy guy who just wants to rinse and repeat a reliable process that can statistically generate a decent amount of return on investment without me pulling my head every day, every night. So, what about you? Day trading or long-term investing? Let me know in the comments. Be sure to like, sub, and click the bell for new video every Friday. I'll see you in the next one.